because of the time constraint, I would like to thank the organizer, Dr. Akram, Dr. Ashraf, Dr. Qayyum, Farhan, and Rahim, as well as the panelists. Before I start, allow me to make 30-second introduction Indonesia, recent development of Islamic finance, because Indonesia is too big to be ignored. 237 million of population with about 200 million Muslim. Currently we have about 11 full-fledged Islamic bank with 23 windows of Islamic financial institutions. And then we have about 46 Islamic insurance and 160 Islamic rural bank and about 4,000 Islamic cooperative with 8 million saving account numbers. And then we have closing to 20 billion US dollar in terms of deposits. And yet we have about 30 sukuk and we still lack of instruments. That's why Indonesia needs about more than 25 new breed of human resources in Islamic finance and banking every single year. That's why with the witness and support of brothers, we established Islamic College for this particular purpose. Talking about moral failure in banking and finance, I tried to search how many crises during 21st century. In fact, it's not in 2008 and 1997 and 1998 only in Southeast Asia, but some analysts say during 21st century we experienced more than 32 time crises, started from 1907 up to 2008, subhanallah. Starting from Latin America, back to Russia, to Brazil, and then to Indonesia, Malaysia, and Thailand, and then to the center of capitalist world in New York. 32 times. Then we have to think there is something to be think about in this particular system. And Islamic banking and finance don't want to be part of this particular failures. Why such moral failures in banking and finance? Of course, the answer are vary in numbers. Dr. Akram very much right when he mentioned about the very pillars of Islam. We have Aqidah, we have Sharia, and then we have Akhlaq. As well as Neil mentioned about Al-Maqasid, Sharia. To me, number one reason of failure is financial targets imposed by shareholders to the management and target from the management to the branch managers, and then financial target from branch manager to account officers. When you have rules and regulation, and then when you have target you have to fulfill before the end of the years, of course, because this is very immediate to the account officer, you have to fulfill your target first, and then somehow you can forego the norms and the morality, because at the end 31st December you will be asked by your manager, not by your malaika and not by your God. It is number one. So the financial target imposed by shareholders and the top management to the lower level is the main reasons. For that, when you conduct Sharia audit in many Islamic financial institutions, you will find numbers of breach and number of TBOs to be obtained. Why? Because you have to fulfill the financial target. Number two, industry and market competitions. It is very difficult when particular Islamic financial institution already approve one particular products with very dalil al-marjuh, very weak argumentation, and then you have such demand from your client to say no to your client because you have another argumentation of Sharia. Talking about products, of course we have to see the market competition. When you competitors already offer the product and you try to think otherwise, it is very difficult. It is number 2 of the reason. That's why add to that maybe the readiness of the stakeholders to educate the market, to educate the investor, to educate the rating agency, as well as to educate the regulator, is take times, while your competitor already offer the product. Number 3, the mechanism of the guardian of Sharia, which is referred to Sharia Supervisory Board. Because I belong to this particular board, I would like to share the idea how it was structured and is structured. For instance, in Malaysia and Indonesia, quite different from the Middle East. In Indonesia, Sharia Board is under Al-Majlis Al-Ulama Indonesia, Indonesian Ulama Council. It is separately from the central bank, while in Malaysia maybe very close to central bank. It is give plus and minus. In Malaysia, Sharia National Board or Sharia Advisory Council can impose because has a bit authoritative power from the central bank. While Indonesia quite different, it is quite independent but relatively free. And then we have a local Sharia Supervisory Council. The supreme authority to issue the fatwa is with national one, while the local one is to implement, to supervise the application of Sharia. So we have, Alhamdulillah, one single authoritative body at national level. But the problem, the Sharia board only meets once a month. Only meets once a month, and very hard to see the transaction in the branches. While we have thousands, if not millions of transactions, how we able to deliver the moral obligation to those particular Sharia audit in the branches, and when we have only one time meeting. The problem more difficult and more complex when one particular Sharia board hold about 70 seats in 70 or 100 Islamic financial institutions around the globe. It is very difficult. In Malaysia, one particular Sharia board only allowed to sit either in the central bank or in the industry. In Indonesia, a bit different. One particular Sharia board only allowed in 2 banks and 2 insurance, no more. 2 banks and 2 insurance to give more time to see the ruling and to see the morality. But sometimes when they invite to Malaysia, it is not accounted. When they invite to Middle East, not accounted. So then we have about 10 or 15 maximum. The final one, or one before final, the moral regulation towards the poor and the needy. When you talk about what already contributed by industry to the lower society of Muslim Ummah and the population, it is very hard to see the significant impact of this particular industry. Let's say yesterday we discussed about sukuk, and then I asked Isra, do you have any experience in developing sukuk for microfinance? And then by then we have one big project bigger than Grameen. So it is one of the challenges of Islamic industry. We have to show our attention, our affirmative policy toward the needy and the poor, because at the end of the day, it is not to get the rich richer, but to get the poor to the middle size. Last time in Indonesia, we have about obligation to about 20% of the bank portfolio to those in small and micro. And those particular banks who allocate this 20% of its credit portfolio earn some points and even reward from the central bank. With this, bank and financial institution, of course, obliged by the central bank to allocate more time and more resources towards small and micro enterprises. I wanted to conclude if we neglect the moral obligation, yes, in a very short time, we will have mind share. Meaning today we capture market share as moving toward a pragmatic and predominated and guaranteed approach in temporary. Yes, we gain the market share. But soon we think, analyze the Maqasid al-Sharia being neglected, the very deep meaning of moral obligation and the philosophy, the unique silent features of the products, then we lose mind share. If we continue, then we will lose the heart share. When we lose the mind share, we lose the heart share, and then in long term, we will lose the market share too. Thank you very much.